500 rupee notes and 1000 rupee notes which were in circulation on that day were demonetized, and from 9/11/2016 onwards, it was it ceased to be a legal tender. The narrative on demonetization initially was that it is to ensure that all the black money would be in the system, will be flushed out. Either it will come back to the system or the people will not deposit the money in the bank account, and the RBI is likely to have a windfall gain on this, which may be passed on to the government. Additionally, they also said that these 500 rupee notes and 1000 rupee notes are largely used in terror funding and also in counterfeit currencies. But as far as terror funding and counterfeit currencies are concerned, there was not much of a statistical information as to how much is being used. Even on the black money portion, that the money held in cash, there was absolutely no information available with the government as to what is the amount of black money in circulation, because black money is normally held in form of cash or it is held in form of assets. Most of the time it is held in form of the assets, and those monies have come to the system as a part of white money, and therefore the black money in cash was very less. There was absolutely no information regarding this with the government. And in fact, after a couple of days, the then finance minister, late Shri Arun Jaitley, said on the floor of the parliament that the government doesn't have any information on the black money in cash, held in cash, either before 8/11/2016 or after 8/11/2016. So in this background, we have to look at the whole picture. One interesting statistics I would like to give you is this. The balance sheet of RBI, if you look at as on 30th June 2016, had 14 trillion as liability in respect of currency in circulation. After demonetization, it came down drastically in 30th June 2017, and as on 30th June 2020, as per the latest audited balance sheet of RBI, it is 26 trillion in cash. Some 14 trillion, it has gone up to 26 trillion, the cash in circulation. And compared to last year, it is gone up from 19 trillion to 26 trillion. So we are looking at, 21 trillion to 26 trillion. We are looking at an increase of nearly 23% in cash in circulation during the last 1 year itself. So this is the factual background behind some of on the demonetization aspects, which you may have to keep in mind. So with this background, let me now go to the actual issues arising on income tax under demonetization. The government issued a notification on 8/11/2016 demonetizing the 1000 rupee notes and the 500 rupee notes. This is based on the recommendation of the Central Board of Reserve Bank of India, and by exercising the powers under Section 26(2) of the Reserve Bank of India Act 1934, the government demonetized after the cabinet approved the proposal. On 8/11/2016, a notification was issued by the Ministry of Finance, that is notification number 3407 dated 8/11/2016. It is important to note that as far as the demonetization aspect itself is concerned, that the rupees 500 and 1000 rupee notes are not legal tender. It was enough if a notification is issued, the basic power being granted under Section 26, subsection 2 of the RBI Act, and you don't need anything more than that. So based on that, the Ministry of Finance issued the notice basically saying that from 8/11/2016, 500 rupee notes and 1000 rupee notes in circulation on that date would cease to be legal tender. But it is important to note that that circular did not prohibit transactions in the demonetized notes. This is a very important point which we will see later. Actually, the circular 8/11/2016 circular was more of an instruction to the banks as to how to exchange the old 1000 rupee notes and 500 rupee notes, how much, what to report, where to send the old currency notes which they had demonetized note which were held by the banks and the system, how to send it to RBI, etc. It was more of a procedural nature and instructions to the bank than anything else. Of course, afterwards there was a series of notifications issued uh, by the finance ministry relaxing the rigors of the use of old 500 rupee notes and 1000 rupee notes as a legal tender. So as I was saying that most of these things dealt with the procedure for exchange of demonetization over the counter. And this is an important point which you have to note is that the parliament passed an act called the Specified Ban of Currency Notes Cessation of Liabilities Act 2017. We'll call it SBN Act for short. So under this is an important piece of legislation which made the transactions in the demonetized notes an offense. Holding, transacting, or receiving or accepting the demonetized notes were made an offense only under the Specified Banknote Cessation of Liabilities Act, not under the earlier notification dated 8/11/2016. Some of the important provisions of sections of this SBN Act are that the appointed day as per that act is 31st December 2016. The specified banknote means the old denomination note of 500 rupees and 1000 rupee series existing on or before 8th November 2016. Then Section 3 of the SBN Act said that these old demonetized notes would cease to be liabilities of Reserve Bank. Some of you may wonder how it is a liability of the Reserve Bank. What you should know is that when Reserve Bank issues fresh currency notes, it treats it as a liability in its balance sheet. If you read, as you can see in many of the currency notes, there will be a promise by the governor of Reserve Bank to pay the bearer a sum of rupees, 500 rupees in value for so actually the currency notes we hold are nothing but promissory notes. Since the Reserve Bank is issuing a promissory note, it is accounted as a liability in its balance sheet, and as and when it gives it to the bank or it brings it out, such currency in the system, in the general economic system of the country, it will account the necessary, pass the necessary entries, crediting the liability and debiting the assets like the banks and other institutions to which it has handed over the cash. So therefore, the liability of the Reserve Bank in respect of 500 rupee notes and 1000 rupee notes were extinguished. The purpose of this is that the government was expecting that once the demonetization becomes effective, many of the people holding black money in cash would not deposit in the bank, and thereby the liability of the bank will cease, and that will become an extra reserve available to the Reserve Bank, which could possibly have been transferred to the government as a special dividend from RBI Act. But it did not happen. As you're all aware that close to 99.5% of the monies in circulation as on 8/11/2016 came back into the system by way of deposits, most of them genuine, some of them through Hawala transactions, some of them through money laundering procedure, etc., process adopted by various unscrupulous people. So basically, this is the liability of 500 rupee notes and 1000 rupee notes were extinguished by under Section 3 of the Act. Section 5 of the Act is very important for our discussion today. As I said earlier, under Section 5 of the SBN Act, from the appointed date, no person shall knowingly or voluntarily hold, transfer, or transact any specified banknote. The proviso to Section 5 dealt with certain exceptions. We will not go into that because it's not relevant for today's discussion. Then Section 7 says that any person who violates this will be visited with the liability of rupees 10,000 or 5 times the amount of face value of the SBN note involved in the contravention. So by 10,000 or 5 times the amount, whichever is higher, would be levied as a penalty. The Section 5 says that the prohibition to hold, transact, receive, pay, etc. is only from the appointed date. So the appointed date is 31st December 2016. So therefore, from 8/11/2016 till 31st December or 30th December 2016, there was no prohibition. So the acceptance of a demonetized note during this period is not an offense. It is not prohibited. See, the law is very clear. If somebody offers you a payment which is not a legal tender, then you can refuse payment. But if you choose to accept that amount which is a legal tender, you do it at your own risk, because that is not a legal tender and you run the risk of it not being accepted as a legal tender by somebody else. But if everybody is accepting the money as a legal tender during certain period, then there is nothing wrong with that. So therefore, it is important to note that the prohibition of dealing, etc., starts only from 31st December 2016, and from 9th November till 30th December, there is no prohibition. In fact, as you are aware, many people were accepting the retail shops, various other, apart from the permitted categories, the chemists, retail shops, vegetable vendors, everybody was accepting the old notes, though they were not legal tender during that period. Along with this, there were a couple of amendments made to the Income Tax Act by the Taxation Laws Amendment. One was Section 115 BBE was amended. Then Section 271 AAB, the penalty in respect of search cases were amended. And then a new penalty section dealing with addition under Section 68, 69, 69A, etc. was introduced. That was Section 271 WAC. I have reproduced this Section 68, 69, etc. and 115 BBE. So you I'm not going to go through the whole thing again, but I'll just paraphrase what that section says. According to amended Section 115 BBE, any addition is made under these sections 68, 69, 69A to D, then the rate of tax on that addition would be 60%. As you are aware, Section 115 BBE was introduced way back in, I think it's from assessment year 12-13. It was introduced, or 13-14, I don't recall immediately, where such kind of additions were subject to a maximum rate of 30%. Under the maximum marginal rate of 30% was being taxed. Now, based on the Second Amendment Act of 2016, the rate of tax was increased to 60%. Surcharge on such tax was increased to 25% of the tax, and then you had the extra education cess, etc. So therefore, the important thing to note is that Section 115 BBE was amended with effect from 15/12/2016. it is an amendment which has been brought in the middle of the previous year. This has certain important implications which we will discuss later. And on the balance of the amount, the normal tax that would have been payable had there. And as you are incidentally, as you are aware that section 115 BB was also amended with effect from assessment year 16-17, saying that the no loss will be set off against such income. Prior to that, what used to happen is, suppose I have a business loss of 2 lakhs in a previous year, and I have an addition under section 68 of, let's say, 3 lakhs. I would say that I would argue before the authorities that what can be added under section 1 tax under 115 BBE is only 1 lakh after setting off the loss of business loss. Some officers were of the view that no loss is permitted to be set off, and later the tribunals and the courts were started holding in favor of the SSC. Recently, the board circular was also issued on that issue, saying that the amendment made is only prospective, it is not retrospective, and therefore, but today, if any loss is incurred, that such a loss will not be set off against the income under section 68, 69, 69A, etc. So the effect of that is that whatever the additions made under section 68, etc., would suffer the tax at the rate of 77% or whatever the arithmetic works out to. So therefore, this was one of the important points to be noted, is that this amendment came effect from 15/12/2016. We have seen about set off. Then section 271 AAC says that any addition is made under these sections 68, etc., where the tax at the rate of 60% is levied under section 115 BBE of the Act, then you are liable to pay a penalty of 10% of such tax if the addition is made by the assessing officer. If you yourself include such income in the return and offer it to tax under section 115 BBE, then there is no penalty. This is basically section 271 AAC. Incidentally, this demonetization, 2016 demonetization, is not the first of its kind in India. We had the demonetization in 1946 and in 1978, and both these types of demonetization were broadly similar, and even the 2016 demonetization has taken certain provisions from these earlier 1978 provisions and then incorporated in the 2016 SBM Act. We'll also go into, or rather see, what are the instructions which were issued by the board during this period. Because what happens when you see the assessment order today, in many cases, they refer to these board instructions and say this board has said so, and therefore we are drawing these kind of inferences, adverse inferences against the assessee, and making additions in respect of the amount deposited in the bank in respect of demonetized currency notes. The scrutiny selection norms for the financial year 18-19 is to be in accordance with instruction number 4/2018 dated 20th August 2018. See, basically you must remember one thing: the scrutiny selection norms are not with reference to any particular assessment year, but it is with reference to cases selected for scrutiny during a financial year. But for the assessment year 17-18, the notice under section 1, normally the assessee would have filed the return by July 2017 or October 2017, September 2017, depending on when his due date falls. And then the notice under section 143(2) is to be issued before the end of 6 months from end of the assessment year, that is September 2018. So The scrutiny selection norms for the assessment year 17-18 would normally be done during the financial year 18-19, and therefore the instructions were issued in the middle, somewhere around 20th August 2018. If you go through this particular instruction, this instruction, which is valid for the manual selection scrutiny norm, does not say anywhere that if there is a cash deposit of demonetized currency in the bank account between 8/11/2016 and 30/12/2016 in excess of certain limits, say 10 lakhs, 20 lakhs, then the case should necessarily be selected for scrutiny. There is no such norm. Therefore, there is one has to be, you may have to ask, I will explain this as to the importance of the selection norms a bit later when we come to that, when we look at the defenses available to us while defending the assessee's case before the appellate authorities. There is another case selection process is through the computerized assistant scrutiny selection scheme, that is popularly known as CAS. Here the computer selection would say what are the grounds on which this case has been selected. So there it may say that the amount has been selected on the basis of the case has been selected on the basis of cash deposits in demonetized cash deposit of demonetized notes in the bank account or some other reason. So therefore we should know as to what is the norm adopted by while selecting the case under CAS. This you can normally this will be stated in the assessment order. If it is not stated in the assessment order, according to me, you can even file a simple letter before the assessing officer and asking for that information to give a copy of the CAS selection scrutiny norms of your case, because you have a right to ask any information regarding your own assessment from the assessing officer. Otherwise, you can file an application under the RTI and get the information regarding this, both under the manual selection norms as well as under the CAS. As I said, based on these norms, the assessing officer made assessments for the assessment year 17-18, where more often than not, the explanations given by the assessee was mechanically rejected, and then by a format order, the assessing officer used to make the addition under section 68 or 69A, as the case may be. There is also another important instruction issued by the board in August 2017, where the board said that while you are scrutinizing a case, when a case has been selected for assessment by issuing notice under 143(2), when you are examining the accounts, please find out what happens, what is the sales, cash sales made by the assessee during April 2016 to 8 November 2016. What is the sales made after 8/11/2016 in cash? What is the sales made in the corresponding period of the earlier year? Is there a large variation? Similarly, what is the cash deposit in the bank account during the current year period? What is the cash deposit in the bank account during the last year period? And the instructions also says that prima facie this information can be obtained from the assessee himself. But if the assessee does not provide the information, whether the deposit is in demonetized notes or other than demonetized notes, you please send a notice under section 133(6) to the bank and ask the bank officer to give you the information. And in many cases, they have invoked section 133(6) and obtained the information from the bank as to how much you have deposited the demonetized notes. So here the assessing officer, then they said that you have to report this to the board in a particular format. It is important to note that in this instruction, the board never said that based on this you simply add. If there is a huge variation, you add. All the board circular instruction meant was that if there is such a variation, this should be the starting point for the inquiry. You inquire as to how there's a spike in the sales, as to what happened, and then examine the explanation of the assessee, consider such explanation, and then make an addition if you feel the circumstances so warrant. This is the import of this board instruction. Now we will come to the main point, which is the how the assessments are made. So you will see that assessments, the additions under section 68, 69, etc. have been made on a number of grounds. There are varied reasons given by the assessing officer as to why he is rejecting your explanation and making an addition under that. Based on the information or the appeals handled by us and our own office cases, I had picked up about 5 or 6 types of additions which the assessing officer makes. It is possible that some of you may have come across a different version of the addition. You may say that in your case, the assessing officer has invoked some other thing and then come to a conclusion that addition is justified. It is possible. If time permits, we will also, you can bring those issues and we can discuss them also. The first one is that in respect of the sales made from 1/11/2016 to 8/11/2016, there's a huge spike in the sales. The reason as to why they are picked up from 1/11/2016 onwards up to 8/11 is that in many cases the assessee would have filed their VAT returns or excise returns under the various laws or any other return showing what is the turnover for each month from April 2016 to October 2016, and therefore it is difficult for them to increase their sales artificially or in a bogus manner for the earlier months. So now what they said, since they had time for filing the returns and for the November 16, they said, okay, let me build up the cash by showing more bogus sales during this period and deposit the money. Even though I earn profit, I earn income and I declare it for income tax purposes, such returns, such income would be taxed at normal rates of 30% or whatever the slab rate applicable to me if you are an individual, and I will escape the clutches of section 115 BBE. So this is the reason as to why people used to boost the sales artificially and in a bogus manner between 1/11/2016 to 8/11/2016. So the assessing officer says that during this period there is a spike. That is artificial, this is disproportionate to your past trends, and therefore I will not accept it, and this is nothing but your own black money which you have held, unaccounted income which you have held in cash. Now you are using these sales to regularize it and deposit that money in the bank account. So this is one of the reasons. Second reason is that as I said, that the assessee used to explain that during this period from 9/11/2016 to 30/12/2016, I accepted demonetized notes in respect of my normal sales. Even though there is not much of a spike in sales, whether there is a spike in sales or not spike in sales, he says that during this period, I accepted from my customers rupees 500 and 1,000 rupee demonetized notes because I wanted the salesman and I could deposit in the bank account. But the officer says that under the law, you are prohibited from transacting in these demonetized notes, and therefore I will not accept your explanation, add those deposits under section 69. So this is the second type of addition made by the assessing officer. The third type is that some assessees would say that, suppose you are not in business, etc. Some assessees would say that I have withdrawn the money from bank account in the earlier period. Now, this explanation, the earlier period can be very proximate to the date of deposit in the bank, or it can be very remote. It can. Some people used to say that I withdrew money in November of last year. 2015, I made some withdrawal. 2016, the early I made some withdrawal. Or in some cases, the withdrawal was very proximate to the date of deposit later. So here also, the assessing officer would say that I'm not accepting this explanation because you have not proved that this money was available with you and you did not spend it. So on these grounds, the assessing officer confirmed the, or rather made the addition under these sections and applied section 115 BBE. The next addition is that assessee has not filed an explanation at all. A notice under section 143(1) was issued, assessee did not file any explanation. The another one was that, as I said, instead of withdrawing the money from the bank account, the assessee would say that I sold my property in on an earlier date, which could be in the same previous year or earlier previous year. I received cash. That cash I had kept it with me, and once the government announced the demonetization, I deposited that cash in the bank account. This is one thing. Then the other one was that somebody would say that I held this cash balance right through the year. Or also there can be some buildup of cash balance from 1/4/2016, not by way of sale, but by way of showing collection from debtors, saying that my debtors started paying me, I collected it, I kept the money in cash with me, and then once it demonetized, I deposited the money. And this explanation can also be used for deposits made between 10/11 or 11/11/2016 to 30/12/2016, saying that my debtors started coming and giving me in old cash currency. The assessing officer says, I will not believe it on two grounds. One is that why should you hold such a old cash balance? That is not, no reasonable person will hold such an amount. Secondly, as I said earlier, according to the AO, the transacting in the demonetized notes after 8/11/2016 is prohibited. And another thing is, if you see the assessment order, there would be varied. Some officers invoke section 68. Some officers invoke section 69A. So there is no standard practice. There is no reason, because this also has a very important legal implication as to whether, in respect of the money deposited in the bank account, whether section 68 can be invoked or not. So that is an important issue which we will discuss later. But the fact to be noted is that some assessing officers were invoking section 68, some were invoking section 69A. What we will discuss today is the two important aspects. One is what are the various types of defenses available in respect of each type of addition. Secondly, whether section 115 BBE taxing such additions at the rate of 60% would be applicable for transactions entered into prior to 15/12/2016. The reason for this doubt is that the second Taxation Law, Second Amendment Act 2016 received the assent of the President on 15/12/2016, and therefore we have to discuss whether it would apply to the transactions entered into prior to 15/12/2016. So these are the then 271 AAC is not much, but these are two important issues which we need to discuss. Before I go into the individual assessment and additions and the defenses available for them, one thing we have to keep in mind is this. The courts, as far as section 68 is concerned, the courts have consistently held that the burden of proof that the credit found in the books of accounts of an assessee is genuine is on the assessee himself. The assessing officer is, the burden is not on the assessing officer. It is the assessee's burden, onus to prove the identity of the creditor, the genuineness of the creditor, and the capacity of the creditor to make that payment. So these are the three important facts which have to be established by the assessing. But this particular burden is not a fixed burden. It is not as if the assessing officer can say, no, whatever you say, I don't care. You please prove it to the hilt that the transaction is genuine. I will just fold my hands and listen to you, that's all. I will not make one move. This is not right. There's an excellent decision of the Guwahati High Court in Nemichan Kotari 264 ITR, I don't remember the page number, in 264 ITR, where they have said in a very lucid manner. They say that this burden of proof under section 68 is a shifting onus. Initially, the burden is on the assessee to establish these three facts: identity of the creditor, the genuineness of the transaction, and the capacity of the creditor to make the payment. Once he files the initial confirmation letters or other information which will prove that, then the onus shifts to the assessing officer to prove that that is not a genuine transaction. The assessing officer has to make inquiries and come to a conclusion that the assessee's own income has gone to these people and come back in the form of credits from these parties. So that burden is on the assessee, assessing officer. Again, if the assessing officer discharges this burden by making inquiries, the assessee has got one more chance to say that what the assessing officer has done is not right. So only after considering all these things, the assessing officer can add. Assessing officer cannot add this amount simply by rejecting the explanation of the assessee. So he has to bring on record the materials to show that the explanation and the evidences furnished by the assessee are not reliable. Then only he can make an addition under section 68. As far as 69, 69A, etc. are concerned, the burden of proof is on the assessee to prove, assessing officer to prove that the assessee is the owner of the assets or the assessee has made investments. That burden he has to discharge. Once he discharges the burden, then the proof of source is on the assessee. It is again the same shifting burden, as I said, as it applicable to section 68. So we have to keep in mind that these are the general principles which are applicable while interpreting section 68 and 69D. So now let us look at the various types of assessments and what defenses we have for this. Let's take a case where the assessing officer says that you have deposited 3 crores in your bank account during this demonetization period, and he asked you for your explanation, and you explain that there is a cash sales during this period and that cash sales amount has been deposited in the bank. The assessing officer makes an analysis based on the pro forma given by the board circular, board instructions, and finds that 35% of your sales during this financial year 2016-17 has happened between 1/11/2016 to 8/11/2016. So he says there is a spike in sales and therefore I will not accept your explanation. At least in this case, the assessing officer was a bit reasonable. He said, okay, normally during this period, you would have sold only 1 crore. If I look at your daily sales for the first week of during the last 9 months of the financial year, I find that it normally is about 1 crore every month, and therefore I will accept 1 crore as your sales. The balance 2 crores, I will add it under section 68. This is very important because we have to look at whether section 68 is applicable or not for this. Now, what are the various defenses available to us? before the appellate authorities, one is that even possibly that many of you may not have asked for this information from the assessing officer at the time of assessment, but it doesn't matter. Even now you can ask for this information. First, you find out whether the case is selected under manual scrutiny selection norms. If it is a manual selection scrutiny norm, then as I said earlier, the instruction number 4/2018 does not specify the deposit of money in the demonetized currency in the bank account as one of the criterion for selection. Second point, even if it's under manual selection scrutiny, you have to find out whether your case has been selected for limited scrutiny or for complete scrutiny. If it is for a complete scrutiny, possibly you have you can only contend that my case could not have been selected under manual selection scrutiny norm. But if your case falls under some other norm, there are about 8 or 9 norms given in the instruction number 4/2018. Let's assume your case falls under one of those norms. Then when the assessing officer has made the addition under the in respect of the demonetized currency deposits in the bank account, you find out whether your case has been selected for limited scrutiny or for complete scrutiny. If it is for complete scrutiny, then you have no defense on this ground. You have to accept it. But if it is not on a complete scrutiny, if it is on limited scrutiny, the officer generally cannot convert the limited scrutiny into a complete scrutiny. He has to confine himself to the points which made him to select the case for a limited scrutiny. And in fact, nowadays, at least 143 notice case very clearly, if it's a limited scrutiny, it says under limited scrutiny, you have to give information regarding the following points. So that's what it says very clearly. So if it's a limited scrutiny, if he has looked into the demonetized cash bank deposits and added it, you have to find out whether he has taken the permission from the commissioner to convert this limited scrutiny into a completed scrutiny. If he has done so, fine, you don't have any defense. But if he has not done so, then you can take a ground before the Commissioner of Income Tax saying that he has converted the limited scrutiny into the complete scrutiny without following the guidelines prescribed by the board on this aspect, and therefore to that extent that addition is bad in law. Assessment is not bad in law, but to that extent the addition is bad in law. So this is one of the issues which are available for you. Similarly, if it is cash selection, what you can do is that you can ask for information as to how your case was selected for scrutiny. There also you find out whether the demonetization is a specific point which has been taken as mentioned as a norm for selection of scrutiny. And then you also go through the process to find out whether it is a limited scrutiny or the completed scrutiny and take the same defense as you did in the case of manual selection. On the point whether the board instructions regarding scrutiny norms, are they valid? And if an assessment made in violation of such norms, whether it is valid in law or not, has been a subject matter of judicial dispute, and the courts have held that if you make an assessment in violation of the norms given by the board, then that assessment is bad in law. It is void. It is not even can be sent back to the assessing officer to look into only those items for which the selection has been made. So therefore, if you do it in violation of the scrutiny norms, then you are not, the assessment order is not valid in law. We can rely on the Indorama Synthetics 386 ITR 665 Delhi and the Allahabad High Court in CIT versus Best Plastics 295 ITR 250. 386 ITR 665 is not directly on the point of selection of scrutiny norms, but it is on the point of the reference to TPO in accordance with 3/2016. The instruction number 3/2016 laid down certain norms for the assessing officer to make a reference to TPO under section 92 CA. And the Delhi High Court said that if your reference is not in accordance with those instructions, then the reference is bad in law. Whereas Best Plastics case in 295 is directly on the point, which they said that an assessment made in violation of the selected in violation of the scrutiny norms is bad in law and it is void. Now we'll come to merit. First thing you have to consider, if an addition is made under section 68, the first thing you have to contest is that section 68 is not applicable to the facts of the case. Section 68 is where a sum is found credited in the books of account, and you are not able to explain the source. Now, as far as the cash deposit in the banks are concerned, because finally what happens, even though the assessing officer says that there is a spike in sales, what he adds is the money deposited in the bank account during the demonetization period. So therefore, he is adding under section 68 of something which ought to have been added under section 69A. 69A applies to any sum found invested or deposited, etc., in a bank, or where you are found to be owner of an asset, money, bullion, jewelry, etc. Then, if you don't explain properly the source of such asset, then the 69A would apply. But in such cases, 68 cannot be done. Because the bank deposit is not some credited in your bank account. Bank deposit is an asset for you. So the assessing officer has to ask only for the source for the asset, and only if that source is not explained, it will not come out of it. The second important thing is that 69A is not applicable if the entry is made in the books. Here what has happened, whatever you have deposited in the bank account, the demonetized cash which you have deposited in the bank account during the demonetization period, you have accounted in the books. So the fundamental requirement that if it is not accounted, then only section 69A will apply, is not satisfied. So therefore, once an entry is made in the books of account, section 69A cannot be invoked. So this is a very important point, because this defense will be available to you and will help you in many assessments which are made where the assessee is maintaining books of account and accounted the deposits in his books. In such case, what the AO should do, what he should have done, if he wanted to say that your cash sales, I am not believing your cash sales is bogus, and therefore the credit entry in respect of the cash sales, I am removing it, and then I am saying that these credits are bogus credits, then you are bound to say that from whom to whom you have sold in cash and what is happened. And these are all depends on facts and circumstances of the case, whether you can prove the cash sales or not. Because if you are generally selling in cash as in the case of a retailer, it is very difficult for you to prove that the cash sales is genuine. And in such cases, you can argue that the burden is on the assessing officer to prove that the cash sales is bogus. He must bring something on record to show that the cash sales is bogus, so that he can invoke section 68 in respect of those credit entries you have made, showing them as a sales account. Second important point is that once he removes it from the cash sales, the income from there, the sales account should be reduced. He can't maintain the sales at the same figure and then say I am rejecting the sales and making either addition to section 68 or 69A. So therefore, once he accepts that the sale is there, then you can say you have accepted the sale. How can you reject it for the purpose of the explanation given in respect of the bank deposits. You have not removed my sales account while making the assessment. You have kept my sales account as it is. You have not adjusted my sales. You have not reduced my sales. You have not reduced my income accordingly. And therefore, you have accepted the sales as genuine, and hence the section that is a source for depositing the demonetized currency in the bank account during the demonetization period, and hence section 69A is modern. On the question of, there are any number of decisions on this. I just given you one or two decisions where the courts are held that if an entry is made in the books of account recording an asset or a value of an article or thing, then section 69, 69A, etc. are not applicable. So these are the two decisions. One is a tribunal, the other is a decision of the Bombay High Court in 282 ITR 251. But I have given only a few sample cases. There are a large number of cases which is very clear. In any case, it is very clear from the wordings of the language in section 69A that if the entry is made in the books, no addition under section 69A. Then there is a decision of the tribunal in 79 ITR Tribunal 595 in Bhagwan Merchants Private Limited case, where also they said that just because there is a spike in sales, you can't disbelieve sales. The burden of proof is on the assessing officer to bring something on record to show that such a sales is bogus. See, one way of looking at it is there's a possibility something like this. Let us assume that you are selling machinery. Normally, all your sales are made to the people who are using that machine, and they make the payment through check, or they make the payment through banking channels. And if you say in such a case that I have made a sale of some 2 crores or 3 crores during this period in cash, it might be a bit difficult to believe. So though the assessing officer does not bring any material to the contrary, your explanation doesn't sound plausible. See, your explanation has to stand the test of preponderances and probabilities that it is true. If you are really sold in cash, then it is your duty to find out, to inform the assessing officer saying that I have sold this machine in cash to this particular person and get a confirmation from him. If you do this, then the assessing officer has to make his own inquiries to disbelieve you. He can't simply say that you are a machinery seller, nobody will buy machinery in cash, and therefore I will not believe your story. Because you have prima facie discharged your burden of establishing the identity of the creditor, his ability to pay, and also the transaction is genuine because you have raised an invoice, paid the appropriate indirect tax on this, and hence you are not, it is not a bogus sales. That could be a ground for you, but without anything, you can't say that I have made a cash sales to somebody. Contrast this with where you are a retailer, where you normally sell in cash. When you normally sell in cash in retail, it is very difficult for you to prove the identity of the buyer. In many cases, you don't know who they are. A few customers who are regular, you may know, but other than that, there's nothing. So you will not remember that, and you cannot also find out who is the person who has bought in cash in you, because you are only going to give him a cash receipt for that. Cash sales, cash bill you're going to raise and give it to him. You don't write his name or anything like that. Even if you write his name, you don't write his address or PAN or anything like that. You just leave it at that. So therefore, whether the sales is genuine or not, it basically depends on the facts of each case. What is the nature of your business? What is the normal method of sales? Whether you have cash sales earlier or you don't have a cash sales at all. Even if you don't have a cash sales, whether you are able to establish the identity. In such cases, you can prove that sales is genuine. Otherwise, the assessing officer has to disbelieve the sales, remove that income from the sales account, and then make the other adjustments and then do that. One point which I have not put in the slide, but which you'd like to discuss right now, is that suppose he removes from the sales, what happens to the closing stock? especially if you are a dealer in goods. Will the closing stock be increased? Can the officer say that I am not going to allow this, and therefore to that extent I will increase the closing stock, and therefore he will remove only the GP portion of the sales? What happens if you are maintaining proper stock registers and stock records to show that is my stock as on that date? This is, you can always take a stand that if you are able to prove with your record that there's a stock, then if he rejects your sales account, he has to remove the entire sales and then add it under section 69A, subject to, of course, the various safeguards which are available to you. Otherwise, he cannot simply retain sales as well as make addition under section 69A. As I said earlier, the instructions given in August 2017 is only a point for starting point for inquiries. It has nothing to do with addition. The board has not told any officer to make an addition, merely on the basis that there's a spike in sales. Now let us take another case. In this case, what happens is that the assessing officer states that, see, you have given an explanation that you have accepted sales and the consideration in the demonetized notes during 9/11/2016 and 30/12/2016. According to the assessing officer, as per the notification dated 8/11/2016, once these notes have have ceased to be a legal tender, you are prohibited from accepting that note. Therefore, he says that I will not accept your statement and I will add it under section 69A. This is also a case where the books are maintained, and this is also a case where, in addition to section 69A, the sales has also been taxed as it is. No adjustment has been made on that account. What are the differences? One is what I explained to you regarding the cash selection, scrutiny norms, etc. Similarly, the fact that you have made an entry in the books of account means that you cannot do it under section 69A. Specifically on the point of the assessing officer that you are prohibited from accepting any demonetized notes between 9/11/2016 and 30/12/2016, you can rely on these provisions of the SBN Act, which I explained to you in the beginning. As I said earlier, 8/11/2016 notification nowhere says that you can't transact in the demonetized notes. It is only section 5 of the SBN Act 2017 which prohibits holding, transferring, or receiving specified bank note from the appointed day, which is 30/12/2016. Only from 30/12/2016, you are prohibited, 31/12/2016, you are prohibited from transacting in the demonetized notes. Until that day, you had every right to accept the money in demonetized, currency in demonetized form notes, even though it is not a legal tender. So this is a very important defense available to you. Wherever the assessing officer invokes the notification dated 8/11/2016 and says wrongly that you are prohibited from dealing in the demonetized notes. Similarly, if the entry is made in the books of accounts, section 69A cannot be given. We have seen the legal background for that. We have seen the legal basis, the same case laws you can use. Once sale is held to be genuine, then the source for depositing the demonetized currency notes in the bank is proved. In this case, the assessing officer does not deny that you have made sales. See, in the assessment order, it doesn't say anything like that. At least in the previous case, he said that there's a spike in sales, so therefore I will not believe in it. But here, he does not say anything like that. He simply says that I will not accept your explanation because you have accepted demonetized notes during the period from 9/11 to 30/12, which according to him is prohibited. That means he is accepting your sales is genuine. All he is saying is that I will not believe your explanation, and we have proved that there is no prohibition till 30/12/2016, and hence my explanation is to be accepted. Sorry. My explanation be accepted and the addition should be deleted. Next case. This is another type of case. Here what happens is the assessee does not maintain books at all. The assessee deposited cash in his bank accounts before 30/12/2016. Such cash was held in demonetized notes and then it was given. The assessing officer says that he has, the assessee's explanation was that he has withdrawn the money from the bank account for purchase of a property. The deal did not go through and therefore he had deposited the money back in the what the assessing officer says is that you have not given me any proof that you were negotiating for a purchase of property. You have not given me any proof that you have not utilized the money otherwise and that money was available with you, and therefore I will not believe your explanation and I reject your explanation and make an addition under section 69A. So in this case, what are the defenses available? Again, selection norm is there, but the defense regarding entry in books of account being made and therefore section 69A is not applicable is not available to you because you are not maintaining books at all. So once you don't maintain books of account, that defense is not available to you. You have to offer a satisfactory explanation regarding the source. According to you, the explanation is that I have withdrawn the money from the bank account and kept it with me for the purpose of purchase of a property, and the deal fell through, so I did not. Here the question is, who has the burden of proof, or on whom the burden of proof is to show about the utilization of cash? Whether it is on assessee or whether it is on the assessing officer. Put it in a proper perspective. Let us say that is the burden of proof on the assessee to show that he has not spent this money for any other purpose. This is trying to prove a negative fact. This is not a positive fact. Positive fact is something, okay, you say I have utilized money for this purpose, then you are saying a positive purpose and it's a positive act, and therefore you have to give documentary or other acceptable evidences. But when you say I did nothing, what is the proof you can give? Maximum you can give a proof is an affidavit saying that I did nothing. So similarly, you can give a proof in the form of an affidavit saying that you held the money in cash. So this argument of the assessee was accepted in the following decisions. One was that Gordon versus DCIT, ACIT versus Baldev Raj 121 TTJ, and the Delhi High Court judgment in CIT versus Kulwant Roy 291 ITR 36. In these decisions, it was held that the assessee in substance cannot prove a negative fact. You can prove only a positive fact. You can't prove a negative fact. And therefore, if somebody wants to say that the assessee did not have the cash with him, he did not hold the cash with him on the date of deposit in the bank account, then the burden of proof to prove that fact is on the person who is alleging it. Here the assessing officer is alleging that you did not have cash. So therefore he has to bring on record some material to show that I have spent that money. But there is one very strange decision of the Delhi High Court recently in 423 ITR 150 in Sashi Garg's case, where the assessee had withdrawn money from the bank account and he had kept it with him, and she said that I have deposited the money in the bank account because the deal fell through. The court says that the burden of proof is on the assessee to show that she did not spend that money and she had the money with her. Unfortunately, the court did not notice its own earlier decision in 291 ITR 36. The court also did not go into the question whether a person can prove a negative fact. Without going into a question on these things, the court held that the assessee has not proved that the money has not been spent and it was available in cash with her, and therefore the addition under section 69A is justified. With respect, I would say that this decision is not correct in law, because one is that it has ignored a binding precedent in 291 ITR 36. Therefore, you can argue, if department quotes this decision, you can argue that this decision has no precedence value because it has not followed the earlier binding judgment, and it is well settled that a division bench decision is binding on another division bench, and if the later division bench wants to disagree with the earlier division bench, it can't overrule. Maximum it can say it can record its disagreement in the judgment and refer the matter to the Chief Justice to constitute a full bench of the court consisting of 3 or more judges, and that full bench will decide who is right, whether the case A, the judge A is right or judge B is right, which is the correct decision. But a bench of the same coordinate strength cannot overrule another judgment, and without noticing the earlier judgment, if it gives a contrary judgment, the later judgment is not binding because this judgment is held to be per incuriam. Next. This is an important point. Sometimes you may come across something like this. See, in this case, what happened was the assessee is a non-resident. He has been living abroad for nearly some 30 years or 40 years, and he comes to India only on visit. He has no known source of income in India, except possibly the bank deposit, etc., but no other source of income in India at all. So some cash was deposited by him during the demonetization period, and such deposit was in demonetized currencies. So the assessing officer asked him, he said, I sold a property about 2 or 3 years back, and then I received in cash. Then I had kept the money with my father. And then once the demonetization happened, I deposited the money in the father's account, in my bank account in India. So the assessing officer says that I'm not going to believe your explanation. You can't hold 50 lakhs in cash. Nobody will, especially you are a non-NRI. How will you hold 50 lakhs in cash? That is not reasonable. You know about the banking. You will not allow this income to be idle, etc. And he says, gives number of reasons, and then says that explanation is rejected, and I'm going to add this 50 lakhs. So what are the defenses? The defense of same regarding the scrutiny selection norms. You can use the same defense. Since you are not maintaining the books of account, the defense regarding making the entry in books of account does not arise. Now, what you can say is that there is no law which says that I should deposit money, cash, currency in my bank account. It is up to me. I run the risk of that. If it's lost, it is I run the risk. I am the one who is losing the income. As long as I'm happy with that, who are you to ask me? The income tax officer cannot ask me a question as to why you kept something in cash. Many of you are aware, or perhaps your clients who are in retail business or even other business, you will find their cash balance in books is huge. Sometimes it runs in crores, but they consistently maintain that. Consistently, they show a large cash balance in the books. So we can take these kind of examples to show that in India, keeping huge cash balances is a normal practice, despite the advancement of the banking practices, etc. in India. Still, people prefer to deal in cash, and therefore I have kept the money in cash with me, and there is nothing wrong with that. That is one argument you can say that. Another important thing, very interesting argument is that I would explain the decision of the Supreme Court in Noor Jahan in a bit more. Here, what happened was the Noor Jahan's case, the assassin Noor Jahan was a very young person, okay, and she had deposited some cash in the bank account, and the assessing officer made an addition. She offered an explanation which was rejected. When the matter went before the Supreme Court said one important point. Section 69, 69A, etc. use the expression the assessing officer may add. It is not shall add. So according to Supreme Court, even if the explanation given by an assessee is unsatisfactory, it is not necessary for the assessing officer to make an addition if the attendant facts and circumstances of the cases so warrant. So just because your explanation is unsatisfactory, the assessing officer need not draw an adverse inference. And for this, we have to go to the decision of the Kerala High Court, which finally went to the Supreme Court. The Kerala High Court took note of an important fact. Kerala High Court decision is cited in 123 ITR 3. They said this assessee is just some 18 years old or 19 years old. I don't remember the age. They're very young. And it is impossible for her to have earned this kind of money and deposited an undisclosed income in the bank account. And therefore, on preponderance probabilities, this assessee could not have earned so much income. So this is an attendant circumstance which the AO should have considered and then taken into account and said, okay, even though your explanation is not satisfactory, I will not make any addition to 69A because you could not have earned this income during considering your age. So applying the same principle, we can say that this non-resident who never came to India except on visit, who has no source of income other than some bank deposits, bank interest, etc., no business, no capital gains, no other transactions, etc., then you can take a stand that I could not have earned this 50 lakhs in India and it does not represent any this one, and therefore my explanation that I sold the property earlier and kept the money with me has to be accepted. Now, some of you may ask a question, sir, it's fine that 50 lakhs is okay, but what happens if the assessee did not disclose the capital gains? Has he filed, if he has filed the return regarding the sale, disclosing the capital gains, then his case stands on a much better footing. But if he has not done that, can the assessing officer say that, no, you have not even filed the return and therefore I will not accept your explanation and I will add it in this current year for the assessment year 17-18 and tax you under 115 BBE. The defense for that also is available to us. If the transaction of sale is genuine, you will have the necessary documents with you. You can prove it to the assessing officer, this is what it is. And at worst, what the assessing officer can do is he can reopen the assessment for that year if it is within the period of 6 years, because you have not filed the return. Or even if it is otherwise, okay, he can levy capital gains tax and relevant interest, etc., but he cannot make an addition under section 69A. So that is very important. So this Noor Jahan principle can be applied in appropriate case to show that the assessee could not have earned this kind of income and hence it does not represent an undisclosed income. See, some courts have held, especially Madhya Pradesh High Court has held in one case, the entire basic foundation for 68, 69A, etc., is that you had some undisclosed income, which you are trying to convert, which you have used for making a purchasing an asset or showing it as having received from somebody else instead of your own money, etc. Therefore, only this is the fundamental underlying principle of these sections, and therefore there should be a possibility of the assessee capable of being earning such income. If suppose you are carrying on business, yes, then the presumption can arise that saying that this is out of your business, this undisclosed income is from your business. But if you are not carrying on business, we don't have any source of income, you can definitely take this stand. The next one is a variation of the earlier amount. You had built up a cash balance as on, let's say, 8/11/2016 to the extent of 1 crore 10 lakhs, not on the basis of any sales made during the earlier period, but you have made entries in the books to show that you have collected your old debtors. Okay, this can be prior to between 1/4/2016, or it can even be after 9/11/2016. It does not matter. It applies to both of them. In this case, you have explained the source that I have received money from various debtors, and I have used that money to deposit in the bank account. Your source is explained. If the assessing officer wants to disbelieve it, first he must prove that the the collection from debtors is bogus. He has to treat it like a cash credit under section 68, issue summons to all those persons, whether they gave it in cash, and then come to a conclusion after giving an opportunity of cross-examining them to you. He can take a stand that your explanation is genuine or your explanation is not reliable. Based on that, he can have made an addition to section 68. But in all these cases, what the assessing officer does is that he rejects your explanation and simply adds the cash deposits, ignoring the fact that there is an entry in the books, ignoring the fact that there is you are offered an explanation which is reasonable, and if at all you want to reject it, you have to reject the credit entry and not the entry regarding source regarding the deposits in the bank. The assessing officers have made, according to me, a blunder on this, and this could cost them in appeal. Maybe CIT appeals may not allow your appeal, but I'm sure at the tribunal level and at the High Court level, you will have a much better chance on that. Same defenses, the books entries have been made, the scrutiny selection norms, and then addition cannot be made under section 60A9A. It has been made only under section 68. And if you are able to do that, you can also file affidavits in support from the debtors saying that they paid you cash. This Action Global Private Limited 75 ITR Tribunal 504 is the one on demonetization period. Here they rejected the increased sales, the assessing officer's theory that increased sales is not proved. They said that you can't say that. So the Action Global 75 ITR 504 is on a demonetization on this. There are quite a few good decisions on that have been considered in that decision. So you may kindly look into that and have a better idea on the subject on that. Last one is, of course, is not an actual case. It is just I'm giving you an example. Okay. Now let us assume that for some reason or other, you have not deposited any money, any of your demonetized currency notes in the bank account. You couldn't do it. Either you are not in India, you didn't have anything, so you had the cash with you, or you are afraid of depositing in the bank account. You are trying to do something else, nothing happened, and therefore you just kept it with you. So after the demonetization after 31/12/2016, say in April 2017, you are subject to a search under section 132 of the Act. Then the officer seizes these 3 crores in demonetized currency. And he says, I'm going to add these 3 crores in your income for the current year because you have kept the money with you. There's 3 crores, I'm going to add it in an assessment for the 153A or under 143.3 in respect of the year of search. Okay. So the question is, can he add these 3 crores? What is the value of these 3 crores? As we noticed that after 30/12/2016, 31/12/2000, there's a total prohibition of this. It ceases to be a legal tender from 8/11/2016, and therefore these demonetized notes have become nil value. You seize, but you can't add it as income. You can't add 3 crores as my income under section 69A. For this, you can rely on a decision of the Karnataka High Court in Andhra Pradesh Joint Combines 282 ITR 490. Just one something. To go back to, I just minimize this one. That right. So this 282 ITR 490, the Andhra Pradesh Joint Combine said that when the demonetized notes, this is 1978 case, when the demonetized notes were held by the assessee, after the period of depositing the bank in the bank was over, they said it has no value, so you cannot add it. So this is very important to do it. If the assessing officer wants to add it to as income of the earlier years, then he has to give a specific finding, bring materials on record to show that the income was earned in a particular year. Because normally the presumption under section 69, 68, 69A, 69, etc. is that it is be assessed in the year in which you are found to be the owner. In which year you are found to be the owner? You are found to be the owner in the year in the financial year 17-18, which is assessment year 18-19. So the normal presumption is that such cash should be taxed only in the assessment year 18-19, but its value is 0. If the assessing officer says, no, during this period you could not have got this demonetized currency at all, you would have got it in the earlier year, and therefore I am going to tax it, then he must say that to which year it belongs. He can't simply arbitrarily choose some year and say, I will tax you in that year. He has to say that he has to bring enough evidences on record to prove that you earned the income in that year. So I have already explained that, of course, this whether it is 68 or 69A, which is applicable, I have explained that. Bharat, how much more time I have? I have almost finished.
Sir, yeah, we're about 2 minutes from the thing. You can take about 5-10 minutes, not a problem.
Okay, no, because afterwards questions will be there, no?
Yeah, we have one question as of now. So you can take.
Yes, I know. I have almost finished. There's nothing much on this. Okay, because 68, 69, etc. or those provisions I've already explained. When 68 will come into picture, when 69A will come into the picture. The one important point here is that the entry in books of account, etc., is that the bank passbook, etc., is not considered as your books of account. The definition of books of account introduced with effect from 1/6/2001 only says that includes ledgers, day books, cash book, etc., whether kept in written form, electronic form. The bank statement or bank passbooks are not part of your books of account. The Bombay High Court has held so, and therefore the question is the assessing officer cannot say that I find this credit in your passbook and therefore there's a credit in your books of account. I'll invoke section 68. That is not correct. He has to invoke only section 69A because bank passbook is not your books of account. important point is, suppose he says the assessing officer argues before the appellate authorities. All right, I made a mistake in saying section 68. Actually, it is 69A. The question is that whether 69A or 68, whether it's a mere quoting of a wrong section, or whether you have a totally different, because 68 is added under certain circumstances and 69A is under certain different circumstances. So whether this argument of the assessee will hold good or not depends on how he has treated this item, how the discussion has gone in the assessment order. From the assessment order, from the discussion in the assessment order, if you're able to find out that the assessing officer is conscious that it is under section 68, and he has quoted section 68, he discusses case law regarding section 68, then you can take an argument that he cannot argue saying that it is to be treated as under 69A. But on the contrary, if the discussions in the assessment order show that he had only 69A in mind, but he has wrongly quoted section 68, possibly then the fact that he has done under section 68 will not go against him. Recently, the Karnataka High Court in KM Nagaraj versus DCIT 425 ATR 533 held that when the notice given under a wrong, quoting a wrong section, it does not become invalid, it is valid. So based on this decision, possibly the department will contend that the reference to 68 is only a quoting of a wrong section, and the addition is to be confirmed as 69A. Bangalore Tribunal in some of the cases has upheld this principle, and there are also other decisions to this effect. So therefore, whether you can use this argument or not depends on how the assessing officer has discussed this addition. If you are able to prove from the discussion that he had only section 68 in his mind, he had kept that section only in mind and not section 69A at all, then you can argue that yes, the assessing officer cannot justify it under section 69A at a later stage. But on the contrary, if it's only 69A, then he meant 69A, but he has mentioned wrongly section 68, then he can justify it under section 69A. Last thing is also I would like to discuss and close the device. As I said, section 115 BBE was introduced with effect from 15/12/2016, increasing the rate, sorry, not 115 BBE, the rate of increase, the tax rate being increased from 30% to 60% was with effect from 15/12/2016. So there are some people who are arguing that in respect of transactions entered into between 1/4/2016 and 15/12/2016, the new rate is not applicable. The new rate is applicable only from the 15/12/2016 when the act was amended. In my view, this argument is not valid. Basically, is when they ask, when I ask them why are you arguing on this point, they say that, I mean, they give a very esoteric reasoning. They say that, see, I had no source for this cash. I deposited it. I knew that I can offer it as income under section 69A and then pay tax under 115 BBE. So I thought the tax rate is only 30% at that time. If I had known it is 60%, I wouldn't have done that. There is some sort of a theory of estoppel they are trying to bring in, which in my opinion is pure hogwash. This kind of, this one cannot be applied because the law is very clear. Because the law says that you have to apply the law applicable as on the beginning of the assessment year. The amendment made by the Taxation Law, Second Amendment Act 2016 says very clearly that the amendment will take effect from 1/4/2017. That means it is applicable to the assessment year 17-18 for the whole year. You see, normal rule is this. This is what Supreme Court said in Harprasad and Company in 99 ATR, that the tax is on, though the tax is computed under different heads, the tax is on one single total income. There is no tax on different heads of income. Once the aggregation happens and then the total income is determined, on that total income you have to pay tax. Of course, this principle has now been legislatively diluted in any number of cases where some income which goes into total income is being taxed at special rates. But subject to such specific provisions in the Act, normally it is a tax on the total income. Even if a categorization is made by the legislature saying that in respect of one category of income, say horse race winnings, etc., it should be at the maximum marginal rate. Within that income, you have to apply that rate for the entire year. You can't apply different rates for the different assessment years. I mean, different dates, saying that this transaction took place before amendment and therefore I will apply the pre-amended rate. This transaction has taken place after amendment, therefore I'll apply the post-amendment rate. Because the law is a law as on 1st April 2017. And that means is for the entire assessment year, 17-18. You can rely on these decisions. I'm relying on these decisions for this position. 60 ITR 521, the Karim Tarvi's case, where they followed the earlier decision of the Supreme Court in Scindia Navigation, and Smith Shipping Lines 20 ITR 572. Now, recently, in respect of 40A1A, the Supreme Court in 426 ITR 289, the case of Sri Chaudhary Transport Company's case, reiterated this principle. There, the argument before the court was that section 40A1A was introduced by the Finance Act number 2, 2004, okay, which was sometime in October 2004, and therefore it does not apply to assessment year 2005-6, though the section very clearly said that it is from 1/4/2005. The Supreme Court rejected the assessee's argument and said that the law is very clear. Law applicable on the first day of the assessment year is to be applied. In this case, the law applicable is 1/4/2005, and therefore this 40A1A, though introduced in the middle of the previous year, it will apply for the entire transactions of the year, and then tax will be accordingly levied. So on the same principle, 115 BBE, the increased rate of 60% is applicable from this one. So with this, I am ending my this one. Only thing I would like to acknowledge is that I have taken some inputs from an article written by Sri Mukesh Kabra, which is reported, which is given in Taxman 220, 114, Taxman 119. I have taken some inputs from him. I would like to acknowledge this because that is one of the well-written articles on the demonetization. And with this, I am ending my presentation. If there are any questions, I would be glad to answer them.
So thanks a ton. So we have a few questions, 2 questions, and there is one more interesting point which is very relevant, at least in the context of cooperative societies. We just go to the questions. The first question is it advisable to raise the issue of correct section 68-69A for addition before CIT appeals, considering the fact that the entire assessment is open before him?
See, the answer to that question is this. Yes, the assessing office in the CIT appeals can say that it is under section 69A and you need not do that, and you can raise this issue only before the tribunal. But you run the risk of sometimes the tribunal saying that they will not admit this additional ground. Okay. So it is very important to this. So my point today is that even in the case of the before CIT appeals, if you raise that issue on 68 versus 69A, yes, I do agree that you run the risk of the CITA giving an enhancement notice or saying that I exercise my coextensive powers and then say that it is actually treated under 69A. But then the question is that it's a very dicey issue whether a CIT appeals can do so. Prima facie, it appears that yes, he can do so. But one argument we can possibly take is that he's finding a new source of income and hence it is not to be taken into account. But by and large, yes, I will agree with the person who has asked this question that you run the risk of the CIT appeals. taking that stand, and therefore it is better that you take this ground before the ITAT as an additional ground. It's a good point. I would like to acknowledge that.
So the next question is a little fact-based. I'll just go through it. Please let us know if there are some inputs, and then I'll allow the speaker to maybe speak for a minute or two. An old age lady sold her agricultural land in 2014 for 25 lakh rupees in cash. The sale deed records that she was paid in cash. During the demonetization period, cash was deposited in the bank. The AO summoned the buyer if in fact he paid her in cash, and how could he prove that it is the same currency? He said he had paid her and does not remember the currency. The AO then referred to some self-drawings in bank account and said if one has cash, what was the need to draw the cash? She said regarding 25 lakhs, she had some plans pending execution. It remained with her. Ultimately, addition was made stating that the lady did not have the cash from sale and that it would have been spent.
Okay, this is like one of my other cases, where I have said that the non-resident had sold the property and kept it in cash. The answer to this is very simple. The first, in fact, in his case, the facts are very clear. The assessee has proved that there was a sale of property and the buyer had paid the money in cash. Okay, merely because the person has drawn some more money later for some expenses, it doesn't mean that the earlier transaction is bogus or she did not have the 25 lakhs in cash. You can rely on those two decisions of the tribunal and the Delhi High Court in Kulwant Rai, where they say that the burden of proving that the assessee did not have cash is on the department and it's not on the assessee. And therefore, in this case, according to me, he has a very strong case to say that the addition under section 69A is not warranted.
So that was those were two questions in the Q&A box. There is one point in the chat box which has been raised, and this is in the context of demonetization and how it was applied in the context of cooperative societies.
Yes.
I'll just read that out. Maybe you can share your thoughts given your extensive experience in the context of co-op societies. In the case of cooperative societies, they have accepted SBNs during the demonetization period. They can prove the identity of the payee, genuineness of the transaction, and capacity of the payee. Can additions be made under section 68 or 69A? So here I just add one flavor.
No, sorry, one point. Additions are made under which section?
68 or 69A, capital A.
Okay.
So there's one flavor. Especially if they're all individual depositors, especially in the village, rural areas, wherein the amounts were say about 20,000, 25,000, running into say 200, 300 depositors. And there the only reference which the cooperative banks had was the Aadhaar card at best, not at all a PAN card. This is something which is coming up in these proceedings, and is a good challenge to take up. So your thoughts on that?
Basically, is it a cooperative society or is it a cooperative bank?
Cooperative societies, sir. There are actually cooperative banks also. There are two, both of them.
No, is it Members Credit Cooperative Society?
Yes, Members Credit Cooperative Society, yes.
Okay, fine. Okay, just wanted to check on that.
Yeah.
It is not some other cooperative society which is not doing this kind of ads. See,
no.
The point is that as far as the banks, cooperative banks and credit cooperative societies which are accepting money from the various depositors and members, okay, it is the burden of proof for them is much less than an ordinary assessee who is accepting cash. I think there is some instruction on this. I'm not very sure. Maybe if I do some research, I'll be able to find that. Well, see, for instance, if that is there, every bank all banks can be asked to prove the source of the deposits in their accounts, whether it is fixed deposit, current account, or savings bank account. Therefore, the rigor of proof in such cases is very less. The assessing officer cannot place the entire burden on the assessee. As long as it's your business to accept deposits from either members or public, and it is in your normal course, according to me, section 68 cannot be added. Once, and anyway, the question of adding under section 69A will not arise because you have recorded in the books. It's accounted in the books, the cash deposits, and therefore section 69A will not apply at all. Here on facts, according to me, you can prove that section 68 is not applicable because you have given them that they are your members. You are given maybe Aadhaar. PAN is not a must. It is only a question of proof of identity and their capacity to deposit that money. It is not they are depositing in crores. They are depositing in some small amounts. Okay, even some 20,000, 30,000. It's not a very big sum. So therefore, the question is section 68 also will not apply in respect of this kind of banks, cooperative banks, and credit societies. That is my view. You have a very good case on this. If the offsetting officer made it under 69A, you can say that in the books it has been accounted and hence it is not there. If it is under section 68, you can say 68 is not applicable at all on these facts, etc. Then by mistake, see what happens in many cases, they make a mistake. Even if they have invoked section 68, what is the amount which is added? It is a bank deposit amount, not the amount received from the members, correct?
Right. Right, sir.
Right. Right. Therefore, you can't say that how can you add under section 68? And even in this case, if the assessing officer, the CIT wants to say that no, I will treat it under section 69A, then there is no problem because you are saying I already accounted in the books.
Yes. Yes, sir.
So therefore, you can't invoke section 69A. And if you have invoked section 68 and added the bank deposit, it's palpably wrong. It's prima facie, not only prima facie, the ex facie it is wrong.
Yes. Yes, sir. It is.